All right, folks. Right now, we are doing an Excel practice to record transactions and organize the accounts to a great general ledger and then create a trial balance sheet. So these are the activities I mentioned in class and also in the PowerPoint file. I just write down here in an Excel file. And also on the top of it, which is very important rule we need to remember, and I require you guys to all memorize this rule. So which is when assets increase, then there is a debit, and when assets decrease, that's a credit. When liability increase, that's a credit. When liability decrease, that's a debit. When equity increase, that's a credit. When equity decrease, that's a debit. And what would make equity increase? That's owner's capital being invested and also revenue. And what will make equity decrease? That's either owner's withdrawal or expenses for salaries, rent, and utilities. So let's first do the account, and we're gonna first do it on the transaction by transaction basis. So this is called journal entries. So let's see, the first one being mentioned here is the owner invested $30,000 to start a company, and we always have this credit and a debit. So I'm going to make this a little bit larger, and then right here I will show debit, and right here I will show credit. Oops, that's my Chinese input system, I'm sorry. Okay, and this is your first activity. I just copy and paste down number 1. So what will happen is cash got an increase, and that's a debit of a 30,000, and then owner's equity got an increase, that's a $30,000 increase. So in this accounting journal, once there is a credit, there has to be a debit. Right? Just clear a little bit. And then the next one, I think I should zoom in a little bit or increase the font. All right, the next one, second transaction. So what happens there is the company uses the cash to purchase supplies. So the cash actually has a deduction. Okay, so what happens to cash is a deduction, and because it's assets, so when assets decrease, that's a credit. So that's a 2,500. And then what happened to your supplies? The supply increase, and that should be a debit. So supply increase, that's 2,500. So just put a 25 together. And then for this font, I want to make them 14 size. All right. And also for this one, just want to link them together, make sure it's the same number. And then transaction 3. So the company purchased equipment using cash. So once again, your cash got reduced. And then, so that's a credit, 26,000. And then you have an equipment increase, and that's a debit. So that's a 26,000, or just to make it equal to this is 26 I just put. All right. So now, number 4, the company purchased office supplies with account, okay, on the account, and there's no cash payments. So this is basically will be recorded as account payable. So what happens is the supply increase, and the supply is the assets. That's something you can control. Something you own, some hardware, and that's a 7,100 debit when it's increase, and then you have account payable. So that's also 7,100. Okay, and the account payable is liability. When liability increase, that's a credit. Number 5, the company provide consulting service and collect $4,200 cash. So here basically it's about cash got an increase, that's a debit, and then you have consulting revenue being earned, and that's a credit for equity. Okay, as you can see, that's a revenue. This is under equity. So when that increases, that's a credit. Okay, number 6, the company provide $1,000 cash for rent. All right, so that's an expense when you pay rent. So what happened to your cash is there is a deduction of 1,000, and also there's a rent expense being recognized here, and the rent expense right here is a decrease for equity, so that's a debit. So just equal to that 1,000. All right, and number 7, the company provided a $700 cash for employee salary. So cash got reduced, and that's a credit, 700, and an employee salary expense, just like your rent expense, that's a debit. So they two match together. And now I can basically go on my own now. So number 8, the company provide consulting service for 1,600 and the rented facilities for 300. So there's a revenue being earned here. So you have a consulting revenue. Well, if I'm lazy, it's okay. I just use it. Just make this equal to consulting revenue. Okay, and the consulting revenue got an increase by 1,600, so that's a credit. All right, so now let me do this. Let me just lock the first row. Okay, so when I drag it down, it always stay there. And then you also have a rent revenue. The rent revenue is a 300, but you do not get paid 100% in cash. Instead, you will have a account receivable being recorded, and that is basically the total. Oops, that is the total of the two. I use a sum. Number 9. Number 9 here is the company received $1,900 cash from the client billed in transaction 8. So basically, cash is received, so you make some money. So that is the $1,900 you received before. Also, you should record what happened to the account receivable. So it actually got reduced. So when the account receivable reduced, it has assets, so it should be a credit. And number 10, the company pays cash toward payables. So basically, what happened to your cash? It got reduced as you use it as a payment. So that's a 900. And then your payable, your account payable incurred on the top will be reduced. So if its liability got reduced, so it should be a debit. You see that we do not put the negative signs or positive signs, we just put them as a credit or debit. And number 11, the company withdraws, the owner withdraws $200 cash. So what happened here is a $200 cash disappeared, so that's a 200 credit, and the owner's withdrawal that's a negative equity, so that's a debit. Right? Number 12, the company receives $3,000 cash in advance. So that's basically cash being received. That's a debit, 3,000, and that also becomes your liabilities for unearned revenue. You just didn't earn that yet, so that's your liability. You have to do your diligence to fulfill that in the future. Number 13, the company pays $2,400 cash for 24 months insurance. So this is about prepaid insurance, which is an asset. And when assets increase, that is a debit. And your cash got reduced because of this. So your cash should have a credit for that deduction. All right. And then I'm going to just edit it right here. Number 14. So the company paid cash for supplies. So cash got reduced, and that's a credit. That's 120, and your supply got reduced. That's a supply increases. That's a debit. And then number 15, you will see the cash is being paid for utility. So cash got reduced. That's 305 credit, and then utility expense, okay, is equal to the 305. All right, and number 16, the company provide $700 cash for employee salaries. So you will see a cash being reduced. That's a 700 credit, and then the salary got salary expense. Which equals to the 700 here. Okay, now I'm going to cut and then paste right here. Okay, so all my numbers are together. All right, just increase the font. All right, so now let me zoom out a little bit. So this is the all the transactions I have put it here. So if I give a total balance, you will see my total. So for this debit, it is a sum of all the numbers above. Hit enter. And my credit is the sum of all the numbers above. And just exactly same amount. So now I have finished recording the transactions. So let's just worry about the journals. So I'm going to delete this part because I'm not using it anymore, and also this part as well. So let's say for the general ledger, okay, for the general ledger, so you should have a total assets, and you should have total liabilities, and you should have a total equity. All right, so what are the terms being mentioned here belongs to total assets? Well, definitely you have a cash, okay? You have a cash as one item here, okay? And under cash, you should have a debit, and you should have a credit. All right, and there are a lot of activities here. So the first one is transaction number 1, okay, and you have a debit of $30,000 for cash. Just put it here. And for the next one, you have a credit. So this is the second one. You have a credit of 25. So just make a link to this 25. And then you keep searching for cash. And then for the third, you have a $26,000 credit. And then if you keep looking, number 5, you have a debit of 4,200. And for number 6, you have a credit of 1,000. And for number 7, you have a credit of 700. And then for number 8, you don't have anything related with cash. But for number 9, that's a debit of a 1900. Okay, and then number 10, you have a credit of a 900. Number 11, you have a credit of a 200. And then number 12, you have a credit of a 3000. And then number 13, you have a credit of 2400. And then number 14, 15, and 16, so it's right here. Number 14, just to drag it down. 16, number 14 is 120 credit. Number 16, 15 is 305 credit. So let me just zoom out so we can see this better. Number 16 is 700 credit. All right. So I'm going to change all the font here to 14. All right, let's just make them uniform. And then the overall balance here, well, you're gonna use the summation, okay? Use a sum, and I get all the numbers here, and you can just drag it to the number, to the column to the left, to the right. Okay, so the balance is basically is the debit minus the credit. Okay, so that's a 4275. That's just for cash only. And then I want you guys to record all the others. You have a owner's equity. Once again, you're going to record it as debit and credit. So you will have a owner's equity. So just copy, paste. So that's from the first transaction, and that is $3,000 owner's equity. And then you don't have any other owner's equity, but you do have owner's withdrawals. And owner's withdrawals is down there, 200. Okay, so that's an 11. You really have to get a journal for that. And let's call it owner's withdrawal. So owner's withdrawal is 11. Just hit enter, and that's 11. And in order to get credit and debit,